Good morning, everyone. Trust we all are doing good. I'm Theo, and welcome to my day 34 video on the 100 days of technical analysis challenge. Today XRP USD caught my interest. Let's dive right into it. So, start from the monthly time frame, marking out major areas of structure. Um, I noticed something on the XRP chart, and it's just a previous area of structure that has been holding for quite a long period of time. So let me just adjust my chart and okay, I guess this is it. Now there's not really much candle on XRP from the monthly time frame. So but this area of structure right here, like this area of structure, yeah, this right here, it's a bit lower to the downside. Yes. Okay, yeah. This area of structure right here. You can see how well it acted as resistance, 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 and now it acted as support, support, and resistance right here. So let's go down to the weekly time frame. Actually, we get a better view and a better perspective of it from the weekly time frame. So support, 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 resistance, 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 and the same thing here again. Now I can just throw my box tool on this. Okay, so I actually know where price currently at. Price at this area of structure. All I just need to do is determine my bias. Now we can see this is a monthly zone right here, and it actually aligns perfectly with the weekly sell zone. And what do we have here? We have a W pattern right here. We have a W pattern. So I've been explaining the concept of M and W patterns for quite a while now, and the whole idea behind the M and W pattern is when the W forms and price projects, price has to come back to the neckline before it projects further. That's just a retest of the neckline. And the same concept for an M pattern. When an M pattern forms, price has to come back to the neckline for a retest before we project further. So that's just the concept behind the M and W pattern. Simple, easy peasy, just like ABC. So the same approach is what I'll be applying here because there's a W pattern on this chart. Now, knowing that there's a W pattern, I want to mark out the neckline first because the neckline would be my target, my concerned area of target. So I'll switch to a line chart and place my horizontal rate tool right here. I know somebody might ask why am I using a line chart to actually know the net line. It's because of I want to deal with significance and relevance in price. So the line chart would actually give me more significance of where price is currently at than using the candlestick chart. So because the wicks will show on the candlestick and I might just go and choose the wicks as the net line, whereas that was just a reaction of price. So I'll just tag this at neckline. Yes, I'm good to go. Now, backtesting the chart frequently, looking for M and W patterns alone, has actually made me figure something out. Like the net line is always aligned with a certain Fibonacci level. So if I throw my Fibonacci on this chart, yes, it does align with a significant Fib level. That's the zone between the 61.8 and the 78.6. Now, another thing is it's always aligned with previous area of structure. So looking here, you can see it aligns perfectly with previous area of structure, which was the net line. That was the last significant area of structure right there. So I expect price plunging into this area before we can look for longs, but I'm more of the short. I'll short the coin, then I look to buy more like of the coin at this area of structure right here. So if it does get to that level, I'll look to buy more of XRP. Now on the daily time frame now, I'm seeing some sort of divergence. Like this looks like a divergence in price, but I really need to actually add an RSI to confirm that. So adding an RSI on the chart, yes, I do have a divergence on this chart. Okay, so I have a bearish divergence to be precise. So there is a bearish divergence in price, and this is actually telling us that there is a huge tendency of price going to the downside soon. So yes, I'll be looking to go short on XRP USD. Okay, taking that off my chart and knowing that I have a divergence to myself, I can now go to the 4 hour time frame. Now on the 4 hour time frame, you can see this was a correction. Then price did move to the upside a bit, but price should be ready for a downside. But I don't believe it's ready for a downside now because of number one, this is a CTL, like a corrective trend to the upside, and price just broke it without a retest. So what do I expect? I expect price should actually come back for a retest at this level before we look to go short or at a significant Fibonacci level. Because if I trade fibs on this swing guy, the swing low, yes, it does align with significant area of structure 61.8, 78.6, and 50%. But previous area of structure was here, so I'll be looking to go short at the 50% fib level. Now, with that known, I can actually go down to the 1 hour time frame and try as much as possible to. So, on the 1 hour time frame, we have this head and shoulder right here, inverted head and shoulders. So, price would still very much push to the upside before we now expect price to come back to the downside. Now, oh, sorry about that. So with that known, I actually I know my bias on XRP USD. So it will first push to the upside first before we look to go short. But I'm more interested in going short on XRP USD. I'm very much interested on the short aspect of XRP USD. So I'll be looking for shorts generally. I will not be interested in looking for longs, but I'll be interested in looking for shorts generally from the daily time frame, the daily perspective. So my bias on XRP USD is to go short back into the neckline. So that's just the whole concept behind it. Now if you do have a bias that is different from mine, please do drop it down in the comments down below, and please do like and subscribe and follow. Thank you.